Hello everyone and welcome to my How to Short series, Unleash Your Trading Instinct on Apple. So before we get into the chart, let's talk about our guidelines. So these are things that we follow that help us trade on a daily basis and pull profits from the market. When we're short selling, stocks need to be at an all-time high. There needs to be a pivot. So we're looking for signs and signals of a trend change. Usually that, breakdown candle, gaps, lower gap down, that is. And we're going to look at different time frames, 15-minute chart, 1-hour chart, daily chart, weekly chart, to see if we can identify that and make that quick money. That's what short selling is about, is the market goes down a lot faster than it goes up. And that's what we're trying to capture here. So before I move to the chart, just remember that this is not financial advice. I'm just educating you, provide you entertainment on how to trade stocks, kind of give you an insider look on the challenges that traders have and the ups and downs and all around. So let's jump into it, shall we? So we said that we wouldn't short Apple again, but we did. In my last video, we were looking at, I drew this trend line here, and I'm saying it's probably going to go up here. So let's go on the daily so we can properly see this. So here we have this channel here. This is the upper trend line, and we could potentially go up to there. But again, so we're just gap. Like we've just been going straight up. We definitely don't have to pull back, but I am expecting a pullback because normally, like we could see that it got extended here, pulled back, and now it got extended here, pulled back, and every time, it just peeked its head out, right? So while we're looking at maybe not just peeked its head out, we're looking at 138 to 145, so that's $7. So yeah, we may be a little early. We will see, because $7 to that is like 152. It actually would line up with this line here, so it makes a lot of sense. But we have another gap here that we've identified. So let's zoom in here. Let's take a look at the 1 hour. So we have another gap up. Yesterday we just went up all day. Then today we pulled back a little. Maybe that's all they need. We started filling the gap here, but buyers came in and we continued higher. So what we could potentially see is something like this tomorrow, where we come back down to the 144 area. 146 or 144. This is the last former break up candle, so we'll be probably looking to buy it here. But just to give you a specific entry of where we got in today was 148. I think 148.70. I think 148.50 or 148.60 is where we got in. I think it's in the spreadsheet. And then we had an up move, and I typically don't get out of a trade. I use the 1 hour candle to help me decide if I should exit a trade, not necessarily a specific stop loss. You just after the candle closes on an hourly basis, I just go in and manually get out of my position, because markets are volatile and stop hunters are a thing. So there are people looking to stop you out by purpose. So not having it in there is to your advantage. So here we have, so it shot up, and then we came back down. So we're using this these recent highs. If we start closing candles up here above 149.50 on a 5-minute, 15-minute chart, then I'm going to have some concern. But I'm going to definitely look for that 1 hour candle close above here to stop me out, because I think we can definitely see a nice pullback here. And it'll be probably a $3 to $5 gain. So which is very nice. So let's take a look at our spreadsheet to see where we are with our profits and our losses. We just started this, so trading does take time to build those profits. So we're going to see some results at the end of the month, and we're going to do that every month to see what our P&L is. We're not too concerned about it, day to day. So here we go. Here's our spreadsheet. So this is part of our NVIDIA gap trading series. We did that. shorting, sorry, short selling series. I'm getting confused between the two. So short selling, we shorted here at 813. We should have. So this is a lesson learned. I'm going to keep my. I have to keep some of that position open. Is what I should have done because it went all the way down to 760. Right. So $12. 12 shares. If I pull up my calculator, if I only sold half my position, I would have kept the other one times what, like 60. So that would have been an additional $720. I didn't do that. So that's something that I need to note. So when we're trading now, I'm going to be selling half my position and letting the rest ride because that's obviously the correct thing to do, and I didn't do that. So let's correct that, and we'll be working on it as we go along. So here are all the trades I did. So I tried shorting it a bunch of times. It didn't work. As you can see here, we're risking small amounts of money. We're not risking, too much. We're not going all in. We're looking to, grind out a living here and not necessarily go balls to the wall. So we're down here, let's see, 440 on these trades plus commission. And here we're up 260. So we're only down 180 here. And if we can get $3-4 off of this trade, then we're going to be in profits on our gap trading strategy. So hopefully you learned something and you're enjoying these series. If you want to join me on Patreon, I do have a special tab here exclusive to our Patreon trades. So I'm doing this free content just on Apple and NVIDIA just to show you how it works, but it definitely works across all charts, and that's what that Patreon account is for. Have a good evening. Thank you for listening. See you tomorrow.